Hey everybody, this is David Skrika. So we're going to talk about something a little different today. I usually don't talk about individual companies on my free stock chart of the day, but today's an interesting day because, like, a lot of you are in the gold market, are in the precious metals market, and we have something really interesting. And this is something that people have been waiting for a while, thinking that, we're going to see this kind of more M&A and takeovers going on because, we have these high gold prices. Gold stocks, even though they've had a nice run, they're still basically undervalued compared to what, the amount of cash flow and profits they can generate at 32, 3,300 gold or 3,000 gold for that matter. So we saw something very interesting today. So there are these royal companies. There's only a handful of them. Royal Gold and Franco-Nevada are the two biggest ones. You see Royal Gold's down today, but it's not on bad news. It's because they're taking over Sandstorm. Now, some of my subscribers do own Sandstorm. It's not a company I've really promoted hard or talked about a lot, but I know a handful of people because I have talked about it. I did get into it. When I was writing Gold Stock Protege for dollarcollapse.com, this was on our recommendation list. And you can see Sandstorm is up 5% today to over $10. And they're essentially being taken over by Royal Gold to create this kind of larger gold royalty company. So that's kind of interesting. And like, here's another one. One of the companies is Metalla, which has started to do well as of late. So these things are all like, I think this is just interesting because I think you're going to see more of this because these mid-tier companies are starting to generate a lot of cash flow, and the larger companies need more production. They need, because a lot of them have not been doing their own drilling when we had that downturn in gold in the 2010s. So I think this is really interesting, and we're going to see more M&A in the sector going forward. Now, this is unique because this is like, again, these royalty-based companies. This is not I don't know, Newmont taking over El Dorado or something, right? This is a kind of a niche part of the sector. But it is interesting because I think you're going to see more of this because let's go look at the size of Sandstorm. Sandstorm has almost a $3 billion market cap, and Royal Gold has a market cap of, you see, 10.8 billion. So, it's a larger company taking over obviously a smaller company, which is usually the way that things go, right? And you can see because they are making a lot more money now, Royal Gold. Like, this PDE may look high, but this is very low. Like in the 2000s when Royal Gold, we'll get the all-time charter just so you can look at it. In the 2000s when Royal Gold basically went from $3, to you can see $100. A lot of the times, this stock was trading at 60 to 80 times their earnings. I remember Barron's actually tried to do a hit piece on the company saying, oh, it was overvalued because it was trading 80 times earnings. But that's usually how these things go. We'll quickly look at Franco-Nevada's valuation as well. And you can see it's 51 times earnings. And again, that may seem high, but a lot of times these things, because they're collecting royalties, so their overhead is a lot lower. They have a lot less employees. They're not hiring miners. They don't have all that overhead that like the mining companies have. So they tend to have these higher valuations. So we're seeing that they're not trading at those historical valuations right now, even with gold trading where it is. So that's really, really interesting to me. And if we let's go look at Sandstorm here, and you can see now it's trading more like a valuation of this. But Sandstorm again is a smaller company, and they're just really starting to amp up their royalties and starting into profitability, which is probably why Royal Gold took them over at this point, seeing that. Like, we look at their financials here, right? You can see, they've gone from 114 million in revenue in 2021 to 183 million now. And again, like, it's you can see that they've been kind of flat over the next year or two. But like, again, when you're up 70% in revenue as a royalty company, and you see they have not been diluting too in the last year or two. They did dilute in 2022 and 2023, but you can see the last year or two, they have not diluted. They've had about the same amount of shares. So you're seeing that, like, them go to profitability. And that's a huge thing because, they're going to continue to probably grow and become profitable. And probably that's where Royal Gold sees kind of like that, the opportunity in there. So I just wanted to show you this. I think it's interesting just because are we going to start seeing M&A? And that's another thing that could lift the price of these stocks too, because then stocks may start trading higher in anticipation that they're going to get premiums for their stock prices, right? Again, if we look at some of these companies, I'll just quickly look at Ego. Again, I don't like to talk about stocks too much. Look at like Eldorado is trading at 12 times earnings. Again, these gold companies usually trade at 20, 30 times earnings. So we can just see right now how cheap they are. They're not priced in for the $3,300 gold. Like Eldorado's done very well, you can see. But like, go look at this 5-year chart or all-time chart. You can see where Eldorado is all-time, right? It's still 80% below its all-time highs. Now, granted, they have a lot more shares outstanding now than they did back then, but even they're below this 2016 high, when gold was like what, 15, 1600, right? So it's like it just shows you how cheap a lot of these companies are. And like I said, the PDE kind of speaks for itself in Eldorado. So I thought I'd just put that in there and say I think it's interesting times that we're seeing, and we're going to see more consolidation in the gold and silver arena. So thank you very much, and everyone have a great day.